Good evening, everybody. Hope you guys are doing awesome. And we are going to do a session today on tax. And everyone's been speaking about the budget. And everyone's been speaking about what's going to happen with VAT. And is it going to go through with VAT? And what's going to happen with the taxes? And it really fascinates me that people are so interested in tax. And but what happens afterwards? What happens during the year? I mean, I do that every single day for a living, that we go in and we build great businesses, and people just don't understand tax. So I want to thank you guys for joining this little session. My name is Johnny Leotis. I am the ultimate business success strategist in business. Why do I say that? Why do I say I'm the ultimate business success strategist? Because I focus on something more than just business. A lot of times people say, "Yeah, you're a chartered accountant and you need to know this stuff." But knowing numbers and knowing tax is one thing. Knowing business is another thing. Knowing the mindset is another thing. And I have taken the last 25 years of my life to study those things. I say I have two loves in business world. I love business and I love numbers. And I say business world because imagine my wife heard that. That would be quite a situation to explain, that you love business more than you love me. That would be a problem. So today I wanna chat to you guys about this thing called tax. And it fascinates me why people are not focusing more on this thing, on tax. Now, just think, we could get a calculator out and look at this, right? So if you think about tax, if you don't take tax serious, if you make 1,000 rand profit, right? If you make 1,000 rand profit and there are different vehicles that you're running your business in, right? So let's just say it's a sole proprietor. That is anything from 18% to 45% tax, depending on the sliding scale that you are in. If you are running your business if you're running your business in a company, a PTY Limited, we're speaking of 27%. And if you are running your business in a trust, you're looking at 45%. Now that is the tax rate. So if you just think about this thing, let's just say on average you're not at 18, you're at 40. Let's say you're at 35%. That means you would have paid SARS 350 rand if you made, and over here you would have paid 270 rand, and here you would have paid 450 rand tax. Now this is net profit. Now, what comes out of net profit? This is the big discussion. You have VAT that you have to pay, and VAT is 15.5% as of May that you have to pay 15.5%. So let's just say your turnover was 1,150. You would have to take out the VAT to go and pay the VAT, and you would have to go and pay your tax. Let's just work on a company. We're speaking, what taxes are we speaking here? We're speaking of VAT, 15.5%. We're speaking of income tax, which is 27%. Now, you've got to understand this. When you want to take money out of your company, you have to pay tax. And the only way you can take money out of your company, is you either draw a salary, right? And therefore you have to be taxed at 18 to 45% in your personal capacity. You can either go take a loan You can go take a loan, which is when you take out a loan and you owe your company money, that is called dividends tax, which you're going to have to pay 20% because it is called a deemed income. It's called a deemed income. And if you do not want to pay the dividends tax, you will have to put interest. You would have to put interest on that. And what are you going to do? You are going to pay tax on the interest that you earn. You're going to have to pay tax on the interest that you earn. So you're either going to draw it out as a loan, you're either going to draw it out as a salary, or you're going to draw a dividend. You're going to draw a dividend. And the dividend is taxed at 20%. Okay? 20%. This is called a deemed dividend. If you borrow money from your company, you have to levy interest on it, and SARS loves this because if you borrow money every year from your company, your loan goes up. Every single year, you have to put interest on your loan and you have to pay tax on it. So they are happy that you keep on paying tax on it because somewhere, sometime, this loan has to go down. And if it doesn't go down, one day you're going to die, and that loan is going to form part of a liability that you owe that money to the company. Or if you sell the company, it's going to be there. And you have dividends, which is dividends tax, right? So this is very important that you understand this. So just by you taking money out of your company, a lot of people say, listen, I remember one guy said, so how do you take, I asked him, so how do you take money out your company? And he looks at me and he goes, what do you mean? How do you take money out your company? I just log on to the bank and I do an EFT. Okay. So that's like literally how you take money out of a company. But you're not allowed to. You're not allowed to. Sometimes I tell people, I see you gave your child money. You're not allowed to give your child money. It's called donations tax. They are over 21 years old. There are certain criteria that you can't just give people money. Oh, I just gave that person money. You can't just give people money. Some of you guys are saying, but that's unfair. The first thing you've got to understand is that tax is not fair. If you are in this world that you believe tax is fair, you are gone, you are lost. Tax is a law that you have to understand and you have to abide by it. You have to comply with tax. You know, so many people they don't comply with tax and then they say they are good business people. It's not to be a good business person when you do not comply with tax. I mean, that's not anyone can do that, but that is a challenge on its own. So what you now need to understand is there is a law called tax, and you've got to maneuver between these laws. Now, this is called income tax, dividends tax. What about capital gains tax? Capital gains tax. Every time you sell something of capital in nature, a property, a business, shares, crypto, anything you sell, the tax of a company is, let's say you make a profit. You make a profit, that means there's a capital gains tax. That means 80% of the profit times 27%. So even if you sell, imagine you work your whole life and build this great property and build this business, and you sell it one day and you say, can't believe that 80% times 27% of the profits I made. I spent my whole life. I spent my whole life working and making money, and when I sold it, I had to pay this capital gains tax. People do not plan their stuff effectively. They say, I'm never going to sell it. Well, you are going to die, are you not? And when you die, there's capital gains tax, there's transfer duties. You've got to understand this. What happens if you go and put petrol at your car? In your car, there is taxes in petrol. What happens if you import goods? There's import duties. Tax is everywhere. Tax is everywhere. And you've got to understand that this 15.5% is going to go up to 16% next year. And so, what's important about this? That's why I always laugh at these people that are coming up and they're worried about the budget and they're worried about that. And I'm saying, what are you doing with your entities, with your structure to protect your assets, to protect against this, to protect against the tax, to protect against one day when you die? And there are certain structures that you've got to learn how to do. And so if a trust is taxed at 45%, obviously I should not operate in a trust. Obviously, I should have, because half of the money that I make gets taxed. A lot of people say, I'd rather put my properties into a trust. So someone heard that, and they keep saying, but I heard the other guy did it. But the other guy might have 4 children, 4 beneficiaries to his trust, and he might have one property that makes 100,000 rand, and he's giving 25,000 rand per kid. Obviously, good idea. Good idea. He's making 100,000 rand. He's distributing 25,000 rand to each kid. The 25,000 rand is below the tax bracket. Why? Because you've got to understand there is a rebate. There is a rebate. So therefore, you only start paying tax on about 95,000 rand. When you start making over 95,000 rand, you start paying tax. There is an interest-free section. When you start earning interest of about 24,000 rand, I could be off on that number, but then you don't pay interest. If you've earned 24,000 rand interest, you do not pay any tax on it. But after that, you have to start paying tax. So the numbers are all relative to your situation. What happens if you only have one kid? You only have one kid, and now you're earning R1 million in that trust. Now what? R1 million, you're going to be taxed at 45%. So the individual's going to be, the trust gets taxed at 45%. Let's say you do a distribution to the kid, because there is not enough exemption. There's not enough individuals that you can distribute your money to. Therefore, you have bad planning, bad structures based on your circumstances. Never ever go and say, but that guy's doing it. That guy's circumstances might be different. What happens if the ages are different? I currently have 3-year-old daughters and a 13-year-old kid, right? So my structure will be totally different than my friend who has 3 kids that are already at university. Totally different. I can't use a trust. I can go put a house in a trust and do distributions. But now, how will the trust own a house? You have to borrow money to a trust. And when you see Section 7C says every time you borrow money to a trust, it's called deemed interest, and you have to pay tax on that interest. So how will that, if you borrow R1 million or 2 million rand to a trust, how will that trust ever pay you back? So you'll keep on paying taxes until you die, and when you die, that's part of your estate, and you're going to have to give that donation or that distribution in your will to the trust. There's so much things that you've got to know how to run a company and a business. So tax is important, very important. And you've got to be legal. Now, let me tell you this. You want to go open a business, you want to go borrow money from the bank, they're going to ask you for your tax clearance certificate. You do not have a tax clearance certificate, you cannot even borrow money. You want to go buy a property, the lawyer's going to ask you for your tax clearance certificate, your tax credentials. What happens if you want to go buy an 8 million rand property, and all of a sudden you ask them for the lawyers have to put the tax number into the application when they do the transfer, and SARS goes, my friend, how did you buy an 8 million rand property? Where did you come from to buy an 8 million rand property? Now they transfer the property onto your name, and you think, I got it right, but you don't understand. In the deeds office, it says that you bought a property for 8 million rand, but does your tax return justify for you to buy an 8 million rand property? Are you paying enough taxes to buy that? What happens if you go overseas and you say, I'm taking money with me overseas? Where did you get the money from to go overseas? So there are so much things. When you pay insurances, when you pay your medical aids, where are you getting all this money? And have you paid tax on that money? So you've got to understand that tax is all around us. Now, a lot of the times, the people that feel they are untouchable and they don't understand that the systems have changed. How the AI coming into effect, the new the credit act, not the new credit, the credit act that aligns everything, that keeps everything consolidated. They know how much money you have in your savings account. How do they know that? Well, a bank has to send an IT3 to SARS to tell them how much interest did you earn on your money. Now, what happens if you earn 100,000 Rand interest and the bank is going to tell SARS that you earned 100,000 Rand interest on your money? Do you know what quickly SARS says? How much money must this person have in the bank? How much money must this person have in the bank to get 100,000 Rand interest? That's why, guys, you've got to be smart about this. And you stop being too outwit, to be too smart and outwit the system. You're not going to outwit the system. Never. You know why? Because one day you're going to die. And when you die, all your properties you have, all the money in the bank, everything is going to come out, has to be transferred, and you are going to pay tax. And the worst thing you can be is so irresponsible to leave all those challenges and those problems because you wanted to save 1 or 2 Rand in taxes. Now you leave all those problems to your children. That's why you've got to be smart about tax, and you've got to be tax compliant, but smart. The laws are there. Look at this. SARS is saying, do you want to build a business in your sole proprietor? Do you want to have a company? Do you want to have a trust? Where do you want to keep your money? Do you want to keep your money in your personal name? Do you want to keep your money in your company? Now, my structures, when you sell businesses, it's a problem. So my structures that I really enjoy, and I recommend this, I always say use all of them. Go have a trust and let the trust own your company. And each company must have its own. So you will have a business, you will have an investment trust, investments, okay, properties, and let them, sorry, this is the wrong way around. Let them belong to the trust. The trust doesn't operate. The trust doesn't operate. And let your family be over here. Husband, wife, children, maybe you want 3 children. Let them be there. You as an individual should never own anything. You do not own assets. You protect your assets. Now, I want you to understand this. If you are doing this and you understand tax, and you are working with the tax system that the government has provided for you to give jobs, give opportunities, and you start saving tax, it's like we opened a restaurant and we're giving jobs to 80 people, and the government has given us opportunities because we're giving jobs to youth, because we're employing people, because there are tax exemptions. So we are using all those tax exemptions legally and compliant in order to pay less tax. And so many times people want to take chances and they don't want to pay the right tax, but it tends to bite them in the arse. So I'm always saying to the guys, work with the system, develop structures in order to save tax. Now, you must understand these are a lot of different taxes. Taxes on petrol, taxes on alcohol, taxes on VAT, on everything. There are exemptions, milk and certain meats and certain things, that oil, that there's no VAT on. But you've got to understand, tax is all around you. Tax is not fair. What you need to do is build structures to the best of your ability, based on your circumstances, based on your age, based on your family structures, in order to take advantage of the tax systems that are designed for you to serve the economy and build job creations, build business creations, and all that. Because business people do get certain opportunities that individuals do not. And you've got to understand that people who earn commission get more advantages. So this is very important, that you guys need to understand that tax is very high. If you actually have to look at the 27%, the 15%, and plus the dividends tax, look at that. Look at that tax. You're looking at 20 plus 27 plus 62.5%. 62.5%. Come on, guys. You can't tell me you're not going to take tax serious. You can't tell me you're not going to get a tax consultant to come in and help you guys to be compliant, legitimate, and look at the structures, or else you could be paying 62.5% tax on every rand that you earn. That is massive. So, guys, I wish this makes sense to you. You should all be studying tax. You should all get a tax professional on board and to help you guys with your businesses, with your families, with your assets, your properties. Because if you do not, there'll come a time that you will be so saddened because you didn't implement the right structures, that you will have worked a lifetime to give 62%, if not more, because what about capital gains tax? What about transfer duties? What about transfer duties? You go and you have these properties on your name and you die, now you have to pay capital gains tax, transfer duties, and you have to pay income tax, dividends tax. There's all these taxes all around you, and you are ignorant and you're ignoring it, and one day you're going to pay the price for your ignorance. Now, guys, you can't go and say, I didn't know. Because that's not an excuse. You're still going to pay the consequence. Okay, guys, I hope this makes sense. I hope this year is going to be an amazing year. The budget's just come out. It's going to be exciting. We're going to make some great decisions. You know what I'd like to give you guys this advice. I know that VAT has come up with 15.5, and I know that you guys are saying that what's going to happen, I'm going to increase my prices. What I suggest you do is look at your profit right now without that extra 5%. And think of innovation ideas that you can keep to the same profit. With that extra 5%, you'll keep to the same profit, right? With innovative ideas. So you keep to the 15% VAT, knowing that it's going to go to 0.5 up. And with that 0.5 up, think of innovation to come and cut the costs of that 0.5, so that your prices do not have to go higher, but your profits stay the same. Most businesses are just going to put up their prices with 0.5%. And what happens if you can think of innovative ideas that you do not have to lift your price, but your profits stay the same? That's impossible, most of you are saying. Innovation. Get your whole team around you. Get a whiteboard and think, guys, how are we going to accommodate the 0.5%? And once you've done all that and you've thought of ways that you can do it, then you go put the 0.5% on and watch what just happened to your bottom line. Thank you, guys. This is Johnny the Artist, your ultimate success strategist, and I will see you at the top. Cheers, bye.